SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network. I'm Kerry Lutz. With us now is our gentleman farmer, Woody O'Brien, coming to us live from the nether regions of the Northeast. Woody, how are you?
Hey, great to be with you again, Kerry.
Yeah, I think you're in the Northeast. You kind of count there, right?
I'm actually right on the border of Maryland and West Virginia, about 90 miles from the White House. The closest town is Sharpsburg, Maryland, where the Battle of Antietam was, and Shepherd, where Shepherd University is.
Oh, okay. So getting close to the South, then you're kind of on the border of the South.
There are no Confederate flags here, but it's technically South.
Yeah. So we're talking about the corruption of the financial system, and you had a great analogy. Tell us that analogy.
I think anybody who lives in the country knows if you live next to a farm and that farm has 2 pigs, you'll probably never smell the pigs. But if that farm has 2,000 pigs, you'll never not smell them. And I think this is a great rule to apply to financial institutions, especially banks. When you have these institutions that have tens of thousands of employees, the stench of that is going to get to everyone. And I think the most important financial reform that we could have in the United States is to limit every financial firm, whether it's a mutual fund company, a discount broker, a bank, a financial firm of any sort, to 25 employees. Because at 25 employees, you'd have companies that are actually manageable, that the patriarch or MBA that was running them would actually be able to know what's going on when you only have 25 people. All the incentives for corruption, all the incentives for derivative and other kinds of destructive things would go away if you could not get bigger than 25 employees. And unfortunately, this is the one reform that nobody in government or nobody in reform circles are talking about because, very frankly, everybody is still trying to figure out how these firms, which functionally are too big to exist, too big to manage, can somehow be reformed. And I would tell you, it's a real simple matter. If you have a farm and has 2,000 pigs, you got to get rid of them and get down to 2 or 3, so you're not having odor trespass onto all of your neighbors. And that's really my number one reform proposal for all financial markets, is you have to cut these behemoths down to a size where they can't really hurt anybody.
Yeah, and I talked with Bix Weir recently, and if interested in his site, it's roadtoruta.com, and he's saying that the way stocks get traded now, who knows if the ownership is actually being traded or not, because certificates get electronically passed on, we hope, through the Depository Trust Corporation. And maybe not. We don't know.
Well, I agree with Bix. I mean, and the recent Wall Street Journal reporter who said all U.S. markets are basically, dark pools. But when if you manage your own money through a discount broker and you place a trade, whether to buy or sell, how do you even know if the trade happened? Because that broker has more information on the viability of your picks. Maybe everything you've ever picked under $5 a share has lost money. And when he sees you buy something under $5 a share, he doesn't place the bet and basically ends up as the bookie short against you, betting against you that you'll pick another bad one. We're literally so far through the looking glass here that unless you're in physical possession of metals or physical possession of other assets, not necessarily if you don't hold it, you don't own it. But if you don't hold it, you don't know if anybody else is holding it for you in trust in your name. We're that bad of a circumstance that the trust in financial institutions is so far dissolved. Investors really need to question everything.
Yeah, look at MF Global. I mean, you put your money on deposit with MF Global, and the funds then get deposited with a fiduciary. And then you wake up one morning and you find out that all the cash that MF Global was holding, the T-bills that are put on deposit as collateral for your commodities trades, wound up in the hand of JP Morgan Chase. How did that happen?
And you're exactly right. And I think MF Global is the perfect example of not just the systemic risk of the system, but the incapability of law enforcement to take the most egregious situation and put even one guy in handcuffs. How in the hell is John Corzine on a golf course someplace today that isn't surrounded by fences and barbed wire? It's unimaginable that this guy who was running MF Global is still walking around raising money for people, going out to dinner. This guy should be in jail, and he should be in jail for a really long time, probably for the rest of his life. And it really begs to that question: if you do not have equal application of justice, if laws are going to be enforced based on whether you're a former elected official or whether your firm could possibly do systemic damage to the system, which I'm not really even sure how that's possible. The system is so damaged already that if you're not going to have equal enforcement of law, what's the point of having laws in the first place? Why doesn't the government just repeal everything and say, hey, we'll do whatever the hell it is we want to do? If we want to let a criminal like John Corzine walk around, that's what we're going to do. I mean, we have the illusion of a justice system when it comes to Wall Street and financial crime, and everybody knows it.
Yeah. I mean, it's just shocking because, the other thing is, what do you know? You put money on deposit with a bank and it's not your money anymore, right?
Yeah, you're a debit. You're not a credit.
Yeah, you're a creditor of the bank. And the fact is that the derivatives exposure that the bank has is a priority to you. They're a priority creditor. It used to be the depositor was the number one priority creditor. Perhaps the government might come ahead, but normally not. Now, all the derivatives trades come ahead of you. And that's effectively, it's criminality here.
It's not just that you're putting your money on deposit in a bank. You're putting your money on deposit in a bank that's probably run by people who are dumber than a bag of hammers. And I'll give you a perfect example of this.
Yeah.
When I bought my farm here in West Virginia, I got my loan from a statewide bank, over $1 billion worth of assets. And the way that I financed the farm was I gave the bank about $250,000 worth of gold and silver bars for them to physically hold on to. This was a bank that had $1 billion mortgage portfolio, and the only gold in their vaults belonged to me. Okay.
Well, that's typical.
And they were asking,
typical.
When did you buy this and how did you acquire it? And I said, well, I bought a lot of it after September 11th when the price was under $400 an ounce. Here is a gigantic financial institution that in the post-September 11th period didn't own an ounce of gold, and that hardly makes them the unique. That would be I would guess, the norm in American banks. But they owned $1 billion worth of paper that was really kind of dicey at that moment. And as my grandfather used to say, the problem is the country's run by rich people who are idiots. and how do you run a financial institution of that size without the ownership of a bushel of wheat or an ounce of silver or an ounce of gold? But it's all in these undiversified, paper promises. And you didn't even lend that money. You took the deposits, gave it to the Fed, and fractional reserve the money that you lent into existence. It's one of those you have people in the banking system who aren't competent to run a photomat. They're not competent to run a Wendy's franchise, and they're playing around with enormous amounts of money. And when they screw up and make terrible loans, people go, well, we need to support these people. No, we need to dig a big hole and bury these institutions. The healthiest thing we could do for the country is take the 10 biggest banks, liquidate them, close them all down, pick a canyon out in Utah and dump all their stuff into it and pour cement over it like it's toxic waste we don't ever want to get out. And when people say, oh, well, we won't be as globally competitive if we don't have these big global wrecking machines in New York called banks, my response will be good. Let the French people, let the English lose money having these big money center banks that are nothing more than wrecking balls. They're not a farm with 2,000 pigs. They're a farm with 2 million pigs. none of us can avoid the odor no matter how far away we are.
Yeah, and the whole premise for them coming into existence and knocking down GlassSteagall, which, in fairness to Clinton and Robert Rubin, GlassSteagall was basically, outliving its usefulness. There were millions of loopholes, and they were finding ways around it. But just like the gold standard, the gold window closed in 1971, and that marked a real transformation of the money system. Repealing Glass-Steagall in 99 was that type of event that really opened up the floodgates and really opened up the world's financial casinos in Wall Street and in London and all over the place. And big mistake. And we need to separate depository institutions. And if they want to go out and gamble, let them gamble with their own capital, not FDIC-backed, government-backed casinos. It's like...
and, there's an easy way to do that, which is to take this whole bank holding process and say you can have a depository bank as one of the many subsidiaries in your bank holding company where you're taking deposits and you're making loans, and that'll be the part that's insured. But if you want to do derivatives and set up a hedge fund subsidiary, if you want to raise money from people for the stock market, set up a mutual fund subsidiary. I think you could functionally have a Glass-Steagall type reform without actually imposing Glass-Steagall, to just say, in the banking part of the business, there's depository insurance, and it has to work more like a credit union. A credit unions never get in trouble because they lend money to their members, they lend money to other credit unions who lend money to their members, or they buy treasury bills. The banking part of a bank holding company ought to operate just like a credit union. And the other screwed around stuff that you want to do, use your own money. If you want to raise risk money from shareholders, do that. But we can't have this circumstance where, one day Bank of America goes, I'm going to take all the bad derivatives from the Merrill Lynch subsidiary and move it over to the Bank of America subsidiary to blackmail the government, because that now has $1 trillion liability in it in an insured institution. That's just accounting fraud that we have to get rid of. And the fact is, we can't get rid of it because the Senate and the House are owned by Wall Street. Yeah. I mean, that Wall Street owns the lint in these people's belly buttons and the dirt under their fingers. It's impossible to have real reform. And it's one of the reasons why I would say that people should not hope for real reform. What they should hope for is collapse, and that a better system comes out of collapse. We're certainly going to get collapse, probably sooner before later. When you see the number of these bilateral trade deals between China and Russia, and even rumors that the Germans might join the BRIC Bank and get out of the euro, boy, I'll tell you what, if you think we're not going to have a country without the dollar domination and the U.S. dollar as the world's reserve currency, that kind of stuff ought to scare you to death.
Yeah, and when we return on the Financial Survival Network, we'll be talking with Woody O'Brien about precious metals.
FSN Radio. It's all about what's next.
Warning, you might live in a no-constitution zone. It's the shocking story you won't see on TV. Depending upon where you live in the United States, you may no longer have constitutional rights. Politicians are quietly squeezing the middle class to micromanage you and extract your wealth. Want to see how? Watch the free video at NoConstitutionZone.com. Soon, you'll have the last laugh by using these cultural contraband tricks and profit like a king. That's NoConstitutionZone.com.
The Financial Survival Network. It's all about what's next.
We're back. We're talking with Woody O'Brien. And Woody, precious metals, you made a prediction back on June 19th. Tell us about that.
Well, my prediction is that we have seen a forever low in 2013 U.S. dollars back in December. The lows that we've seen in the entire gold sector, in silver bullion, gold bullion, and the miners. I think this is a low that will not be retested ever in the current monetary paradigm that we have now. And this literally makes this the lowest risk moment, in my view, to invest in bullion and things that are related in bullion since September 11th. That was the last time we had a moment like this where there was just no more downside to do. And even if you just kind of look around and say, right now, we have probably a dozen low-intensity conflicts going on around the world, but we have 4 very substantial ones. The ISIS revolt in Iraq, the civil war in Syria, the bloodbath going on in Gaza, and Afghanistan, Ukraine. There's an awful lot of wars going on. It's amazing to me that we still have gold under $1,500 at this point in time. I mean, this morning we had the news that these last will and testaments of the big banks are rejected because they're so complicated. They're functionally meaningless. If that doesn't tell you what the jeopardy of the whole financial system is, I really can't help you. Gold ought to be much, much higher than it is now. You can make all the arguments in the world about suppression, but the fact is the suppression over the long term has not really worked very well. It's very effective in the short to intermediate term, but gold is still $1,300, having been $275 after September 11th. We're going to go much higher. The only question is when. If you look at the stock market, everybody thought we were going to blow through the 2,000 level on the S&P 500 with a great deal of ease, starting to look like it's not so terribly easy to do, as more and more people are realizing that the stock market is completely overvalued compared to the growth in the economy. And when a new GDP figure comes out that's just full of air and nonsense about 4% growth in the economy, and that can't even power the S&P over the 2,000 level, look out below. There's an awful lot of room for stocks to go down. And I would only ask people this question, even if we got to 2,000, which do you think is going to get to 4,000 first, the S&P 500 or gold? I think gold will see 5,000 way before the S&P 500 will see 3,000. So this is a great moment in the long term to start buying every pullback, because it's getting harder and harder and harder to suppress the price of gold in the short term, and there's less success with it every time.
Yeah, and I'm looking at the 1-year gold chart, and it just made like a perfect cup with a handle. I mean, it's perfect. I mean, I'm not a real chartist, but if even I can see it, then it's got to be totally glaring. And, the same thing you said about gold, looking at crude oil at $97 a barrel, that's insane. We got, like you said, a dozen low intensity battles. Any one of them, especially the 5 that you mentioned, could blow up at any moment and really, really disrupt the oil markets. And yet it's at $97 a barrel. No explanation for that one. And
but one of the best arguments here about why gold has to go up has to do with the stock market being overvalued. Because if people start to acknowledge that we're at the beginning of a bear market that's going to take the S&P 500 and the Dow down 25 to 50%, as people sell into that money becomes liquid the next day. It starts sitting in a money market fund, getting 0.1% or 0.25% per year when inflation's 7 or 8%. Those money managers and investors aren't going to be sitting on cash for months and months and months. They're going to be looking around the world and saying, hey, what's a bargain? What's cheap? And they're going to start looking at grains. They're going to start looking at other agricultural products. I've been saying for a while, the price of coffee could go up tenfold and it would still be cheap, because it's still barely above the dollar price in 1994, 20 years ago, when there was 1/100th of the amount of money floating around the world. I'm still very, very bullish on coffee. They're going to look at silver. They're going to look at gold. They're going to look at miners of all sorts, not just in the precious metals.
Oh, yeah.
And to me, this money coming out of blue chip stocks has to go someplace. It may make a pit stop in cash, but it's not going to stay there very long. And I think when that money starts to flow into the commodity sectors in a much bigger way, where you have bigger pension funds saying, commodity exposure at 1%. If they take commodity exposure to 10 or 20%, we're going to have a boom in commodities. I think there's going to be a lot of hot money headed to those sectors as the stock market falters.
And we're still even though commodities haven't performed well for the past 3 years, we are still in the midst of a commodity boom. Okay, go back.
Absolutely. And the thing is the fundamentals for commodity are so good because these are things that actual real human beings need. And my favorite ones are the agriculture ones.
Yeah.
Not just because I'm a gentleman farmer myself, but the math is very, very compelling. There's 7 billion people and about 73 million farmers who produce more calories than they consume. Their average age is 61 years old. In 10 years, there's going to be 9 billion people, and 90% of those farmers that are 61 years old are going to be retired or dead. Who is going to feed the world? The truth is, every one of the 7 billion people only has an aspiration to eat 3 times a day. We don't need to buy an iPhone every day. We don't need to buy a laptop every day. We don't need to download a mobile application every single day, but we do need to eat and we do need to have water. And with that kind of stable demand, it's hard to look at some of these commodity prices and just go, you got to be kidding me. If a stock like Apple had these kind of fundamentals and 7 billion customers, it would be 100 times the price it is it's now. So I think there's a lot of commodity prices that are just so low because of stupidity. Because the average person who is invested in the world, especially the average U.S. investor, thinks that they are diversified. But when you look at what it is that they own, it's almost all tied back to the S&P 500 and to blue chip stocks. That's where the money has been pushed in. And it hasn't really even thought about these other sectors. But if you said to somebody, not everybody has to buy an iPhone, but everybody has to eat 3 times a day, how do you own no wheat? How do you own no coffee? How do you own no cocoa? And their eyes just glaze over like, oh, you can invest in that? Well, yeah, of course. You can invest in everything.
Yeah, 100%. And hey, look, these ag markets are tremendously, I don't want to say manipulated because it's not like gold and silver, but the agricultural bill, ethanol, you got all sorts of malinvestment all over the world. EU subsidies in France, all over the place that have distorted these markets beyond all belief. At some point, it's going to have to stop because the purpose of the agricultural markets is actually to feed people, not to power automobiles and not to keep French farmers fat, dumb, and happy. That is going to get worked out in the future because for one thing, we have a commodity connection as human beings
that people fundamentally don't understand. And one of these times when I get a little bit of time on my hands, Kerry, I'm going to make a video, and it's going to be me walking around local towns here with a 1 ounce gold coin and asking people if they've ever held gold in their hand before. And I'm going to let people hold a gold coin in their hand and let them look at it. And you can see it's almost like a light goes on, like their face lights up in a neon way. We have a DNA connection to hard money and to commodities and things that we can hold in our hands. And all of these virtual things that are in computers, we're so disconnected to it because it's a Jedi mind trick. But when you realize that 95% of the public has never held an ounce of gold in their hand before and never had that feeling of real money, when you see people's reaction to that, it's very guttural. And, countries like India, they may be over-owned in gold because they have a religious and cultural tradition with gold and gold jewelry. But the average American is so disconnected to this. I can say it's one of these things that I keep saying sometime I'm going to make a video about this because people don't understand. Our DNA lights up when we hold gold in our hand because we know intrinsically and organically that this is real money.
Hey, I just, speaking of that, our sponsor, Borderless Holdings, has come out with a line of investment jewelry, wearable wealth, because that's going to come back. Because when the government cracks down, not necessarily confiscation, but windfall profits, taxes, all that, you want this wearable wealth because you just go over borders, no duties, it's insurable. So, check them out, borderlessholdings.com, or you can call them at 855-604-6343. I just wanted to throw that in because it's very true what you're saying. investment jewelry. Anyway, Woody, we got to go. Just give us your website where we connect with you.
The investment newsletter is woodyknowsmarkets.com. And by the way, we are the only investment newsletter firm in the world that allows you to lease software, which automatically updates your discount brokerage account to match our model portfolio. We don't know of anybody else in the world who's doing that. And of course, my nonprofit work, abolishfiatslavery.com, for my work to not leave this rock until I have peed on the grave of the Federal Reserve.
Hey, and give us your Facebook page again.
It's just Woody O'Brien. I'm the only Woody O'Brien on Facebook, although there is a Woody O'Brien bar in Saginaw, Michigan. That is not me.
All right. And you find the link on financialsurvivalnetwork.com. Sign up for our newsletter. You get the first 5 chapters of my book gratis. Woody, we'll talk with you again real soon. Thanks so much.
Hey, Kerry, it's always great to be with you. I'm always here for you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.